So you've gone through the basics of trading, you found a strategy that works, and you've been able to stick to it, and you've been able to see profit. However, you get to a certain part of the year where it seems like your strategy doesn't work or isn't as effective as it once was. Pretty much what's going on is that market conditions change, and your strategy may not be conducive for that particular market condition. But first of all, what are the different types of market conditions that you may be in? In this video, let's take a deep dive in what market conditions are, and let's decode the different types of market conditions that we can find in the Forex market. Let's go. Alright guys, so as we decode different types of market conditions, let's start with the very first one and probably the most popular one, which is a trending market. Usually when a market is trending, price tends to move consistently in one direction. Usually it's moving consistently on the bullish side or consistently on the bearish side, but either way, finding success in this type of market condition usually points to identifying the trend. The minute you can identify the trend, whether bullish or bearish, you can then identify the best strategy to use in order to make profits in this type of market condition. The second type of market condition is a range-bound market. Now, in this type of market condition, there's no clear direction. There's no clear bullish direction or clear bearish direction. And as a matter of fact, price is moving within a range. Usually, traders who trade in this type of market condition are usually using support and resistance to get the best entries possible so that they can profit in this type of market condition. The third type of market condition is called the volatile market. Now, in this type of market, there are very rapid and unpredictable price changes that are going on. Typically, this kind of market can be found during major economic news releases, and as a result could be very risky for traders to trade it. However, despite being very risky, for very skilled day traders, this type of market condition could produce some of the best days for traders and some of the worst as well. Let's jump into the charts to find some examples of each of these type of market conditions. Alright guys, so going back to the first type of market condition, which is the trending market. On the chart here, we're looking at gold and we're looking at a trending market. So typically what you'll see in a trending market is that there's one clear direction that price is moving in. And if we were to draw a trend line, then we would see that the market is clearly moving to the bullish side. Now, in a trending market, you'll see this type of market structure. You'll see impulsive move, you'll see corrections, and then you'll see continuations, and followed by corrections and continuations and corrections and continuations, and so on and so forth. Now, the best way to trade these type of market conditions are usually going to be pullback strategies and even some types of breakout strategies. But pullbacks or retest strategies are going to be very effective in this type of market condition. For example, we get this big impulsive move to the upside, and let's say, for example, in my pullback strategy, I like to use Fibonacci and I like to look at the key areas at which price can possibly reverse. So now I'm going to use my fib retracement, and as I use my fib retracement right over here, I could see that clearly that price not only hit the 23.6 area once, forming an area of support, right, but also twice right over here. So once the 23.6 area got hit again, this would have been my signal that price has found support in this area. This may be the end of the retest, or as far as the retest goes, and this may be my buy signal to take this buy, and this would have been a clear win. All right, now let's move on and do the same thing with the next opportunity. Price goes up and now it corrects again, and now you want to predict when is this retest going to end, and you want to do the same thing. So I'm going to remove this previous Fibonacci so it doesn't get in the way, and I'm going to use it again on the next retest to see where I would potentially get into my trade. So again, same thing. We see that price settled at the 23.6 at multiple areas, right? This was the first area that it touched before it rejected that area. We have more rejections at that area right over here, and all over here shows you so much proof that price is not able to break that area, and it's serving as a solid area of support. That being said, I take my buy signal anywhere here. Obviously, it would take a lot of patience. Each of these candlesticks takes an hour, but either way, I still have a bias because my confluences show me that this move will most likely head upwards at some point in time. So I take my buy signal somewhere anywhere here, and then I wait for the breakout. The breakout does happen, and this becomes another win, right? And in a trending market, you can continue this type of strategy. It doesn't have to be a Fibonacci retracement. It could be a MACD retest. It could be a multitude of things that work in a trending market. But these are just some of the examples that you want to use continues in a trending market. So the next type of market we talked about is a range-bound market. And again, we talked about the importance of support and resistance in this type of market condition. So on the charts here, we see an example of a range-bound market. So during this period in time, gold was in this range. There was no clear direction of upwards or downwards, bullish or bearish, but it was within a range. And let's just say gold is the only pair that you trade. Well, being that these candles each are 1 hour long, this could be a long wait if you only trade in trending market conditions. A very long wait before you find another trade. So if you do want to find success in this type of market condition, you do have to change up how you approach entering trades in this type of market. So let's find areas of support and resistance within this market. So right over here, I am going to put my area of resistance. We see that price failed to break this area of resistance multiple times. And same thing with support. I'm going to find my support, and this is the area where price failed to break multiple times while it was in this area. Now, the next thing I'm going to do is jump down to a lower time frame. Follow me. All right, guys, so now we're on the 30-minute time frame. Let's see what opportunities we could have spotted if we were in this type of market condition and if we could have made profits from this market condition. So starting out, once price started its consolidation, it showed me that it failed to break this area, giving me the first indication of a possible resistance. Then price goes back down to this area and shows me a possible support. So now as price continues to range, I see all within this area, again, price does not break any higher than that previous high so far, and I'm just continuing to follow. As we get down here, I have a decision to make. Based on what I saw previously to the left, I know that price settled here not once but twice. Price settled in this area, and there is an area of support. So this could be my first setup right over here. So as price gets back to this area of support, this could be a small buy. And again, in a range-bound market, you're typically not going to see big moves, so you'll probably want to scalp the market in a range-bound market. But I'd probably scalp this, and there is an opportunity to take 20 to 30 pips in this move. Now, what a lot of people would want to do is ride this all the way to the area of resistance, and that would be okay. You would have to be a little patient. Price does come back to the area of support, but doesn't necessarily completely break the area of support, right? Makes a few wicks lower, but nothing definitive to show you that the area of support has completely broken. So that being said, you could have stayed in this trade and allowed it to ride all the way up to TP as it got to this area of resistance over here. And guess what? Once it got to this area of resistance, yes, price did wick all the way up here, but it did not close up there. It closed back down here. That could have been another entry to take price down sell side and capitalize on that sell. That would have been another entry. And again, you get back to this area of support. Price is showing you that it's respecting it. You have another entry for the buy, right? From support to resistance, right? Price gets to resistance over here, shows you all over here that it continues to respect resistance, and you can take that and ride it back down to support, and so on and so forth until it finally breaks. Okay, so in a range-bound market, you want to play support and resistance a lot. You want to be scalping the market, and you do want to be very careful because the breakout could happen anytime. Make sure you use stop losses as you should for any strategy, but make sure you're aware of where you are in the market, and if that breakout does happen, make sure you're protected. And if you're on the right side of things, then maybe you want to let the trade go and see how much profits you can make. So the last type of market condition is the volatile market. And again, in this type of market, there are rapid, unpredictable changes in price, and sometimes the best thing to do is to just stay out. If you take a look at the charts over here, let's look at this particular area right over here. Price was previously in this range-bound market, and this could have been some kind of news release or something that made markets react in this way. Look at this massive wick to the downside, and then this push to the upside. It closes bullish, and then the very next candle is a very big bearish candle that takes out the previous big bullish candle. You'll see them when news releases have differing data. Maybe one data point shows positive for the US dollar and the other data point shows negative for the US dollar. But these are the types of scenarios that usually cause this type of market condition. Now, if you're a really skilled trader, you know that economic news releases can cause these types of market conditions. So patience could be the name of the game. And there may not be any clear-cut strategy, but if you're used to these news releases and you understand how the market moves, there could possibly be a setup for you if you're patient enough. Let's say, for example, you allowed this move to happen, and after this big bearish candle, after you got the close here, you were able to take the continuation downwards on this next candle over here. Okay, so sometimes if you're used to a particular news release, you can make some big profits if you know how to trade it. But for traders who are not so used to it, or beginner traders in general, I would definitely strongly advise to stay away from that and wait till you get more skilled in the craft, and then you'll be able to capitalize on these types of moves. Ultimately, the key thing here is to be able to identify what market condition am I in, and based on identifying what market condition I'm in, then I know what strategy I could start to use to make money in this type of market condition. Ultimately, guys, very important that you understand your strategy, you stick to your trading plan, but the next level is understanding what type of market condition you're in so that you can readjust and continue capitalizing and making those profits. So I hope you guys gain value in this video. I hope you're able to identify different market conditions a little better, and let's continue to make these profits all year round. Take care.